Stop. Stop. We need to just cut this for a second. What the fuck? Where'd you go with that one? In Burundi. I can't stop laughing.
What's up, and welcome back to another episode. Today, we're going to be discussing a few things. Weed, although we don't partake in any such activities. Electric vehicle market, some SPAC stuff, and maybe where you should put your money for the rest of 2021. I'm here with Dave, obviously, as you've come to know, and Kurosh on the phone. Let's get right into it. I'd say, funny enough, we were having a conversation just beforehand about Peloton, so maybe we could go off of that.
So, here's my main question. So, when I look at Peloton, I agree. Look, it's a phenomenal business model for them, and it's being treated like a tech company. But how do you know that value isn't already priced in? When you say, okay, I'm going to buy a stock, you look for potential upside in the future. But Peloton trades at 300 times earnings. They are also not a tech company. They're a traditional, brick. Not brick and mortar, but in the sense that they actually have to send you equipment and they have to employ people to provide the service to you. Yeah. So how do you know in your investment case? How do you know in your investment case, Korosh, that there is going to continue to be upside?
I mean, it's more what I'm expecting. And I expect exponential higher demand in the product they're providing. And with more demand for it, I think they're going to try and innovate more to meet a bigger market. But that's why I'm going for it. I see them as, I know you say they're not tech, but to me, they're sort of a tech. Okay, their software is kind of some primitive software on a screen on your bike, but I think looking at that, there's so much more to go.
But, so this is the problem I always find, is that there's a difference between technology companies and software companies, and most of what we see as technology these days is software, and it's kind of a bit of a misnomer, because technology is traditionally, if you look historically, at anything which allows you to be more productive with your output, right? So we're studying, you look at like GPTs, like Steam is technically a technology. Any workflow, it could be an operational process, that's technology. However, when we associate, tech stocks, we say, it's your Googles, your Facebooks, your Amazons. These are software companies. And software is beautiful because of its low, marginal cost of adding users. It's beautiful because the fact that most developers are relatively affordable, in my opinion, for the services which they provide. I think developers, like software developers, are massively underpaid, just generally in the market. When I look at like salespeople, especially at financial services companies, I think about the skill set required for coding and the skill set required for sales, and they're very, very different. But I do think there's a bit of wage discrimination, asymmetry there. But yeah, so I see what you're saying, Korosh, but is it a technology company or is it a software company?
I mean, very debatable.
Because I don't think it's a software company.
Because of the way the software ties in with the mechanics of the bicycle itself. I think that's more in your call, and actually I'm surprised because you're a big cyclist. Why would you not be all for this? I like golf. I buy Callaway stuff. It should be yours, Steve.
So maybe I can give this from a perspective of someone who cycles sort of, relatively. Obviously I don't cycle professionally, but semi-professionally, I have like a lot of equipment, and I've really invested in it. So the biggest problem for me with Peloton is that the bike is not an accurate simulator of the road. It's not an air bike per se, is it? It's a disc bike. It has a magnetic disc going through it, and so there are two schools of thought when you come to stationary bikes. The first of which is like your watt bike, and they have fans, and that's the same thing like Concept 2 Ergo. And the idea is that it has a flywheel, but the flywheel has blades, and it pushes air through the fan, and that's where your resistance comes from. And then you've got the second school of thought, which is your magnetic ones, which has this big flywheel disc with pads on either side, which basically slows it down through physical friction rather than air. And I've just found that the ones with pads on a metal disc feel nothing like the road. The friction is not only the wrong curve profile, so it's really easy to keep momentum up on those bikes, but it's just not very. It's difficult to explain. It doesn't feel like you're actually riding a real bike.
So bringing it back to from a thesis point of view, it's like, what is the target market for Peloton? Because for people that are quite serious in cycling,
It's not. It just
It's
isn't.
not a great simulator.
Zwift, by the way,
Yeah.
if you're looking, Zwift is the real up and coming market disruptor for professional cyclists.
And so, okay, fine. Maybe that isn't the biggest market for professional cyclists. But then you look at regular gym goers. A lot of people have posited, a lot of analysts have posited that, okay, COVID has accelerated trends towards digital in working out. Unfortunately, as of yet, we don't have, ab stimulators don't work yet. So there's still tech's lagging slightly behind in the gym space, The big three, bench, squat, and deadlift, are still preferred movements for a lot of people. Machines are really only just helping to provide resistance for you to train on. I think there's less in the gym space that you can do currently. I think when gyms open back, the regular gym goer who maybe bought a Peloton will go straight back into the gym. So what is Peloton aiming at? I mean, because for a $45 billion company,
Jesus Christ.
yeah, okay, it does $1.7 billion in revenue. This is 1 year. I wonder whether it's year on year. You look at the Fitbits, the stuff that you buy once and then maybe you give back, etc. I don't know, because it's expensive as well. I mean, you said the bike's 1.7 grand, and then there's a monthly fee. I mean, if you look, gym, even premium gym subscriptions, your Equinoxes, etc.
Is the additional subscription compulsory?
Yeah.
I mean, I
You
assume.
not just use it without the subscription.
I assume you could use it, but in that case, why not just buy a stationary bike? The whole point is to have the software on the side. But I just want to come back to what you're saying and just make some parallels to working from home. So when when you work from home and you talk about how technology has disrupted people's ability to work from home and that we're much better at it now, the work is still happening, right? One venue to do it is at the office, one venue to do it is at home, but the work itself is still happening and the technology is enabling it to happen from home. With Peloton, Peloton and any sort of digital gym thing, the work is still physical, right? The work is still you doing things. So technology is never going to change that until we have, like you say, ab stimulator pads and stuff. So any innovation that happens on sort of in the gym front is always going to be on top of the raw action of you lifting a weight or doing the exercise. So until we have any actual disruption that says, okay, you don't actually have to physically work anymore doing working out. You can just sit on your bed and whatever, have some crazy sound frequencies challenge your body or some stupid stuff like that. Until that actually happens, I don't see gyms becoming that much more unappealing because realistically, if you're talking about outcomes and results, going to the gym is something which is very, very difficult to replicate from home, much more so than working from home, in my opinion.
For a number of things, the cost model, it's well worked out because you got a lot of space you can fit a lot of people into.
It's very high capital costs for gyms.
You can't really fit 500 people on a Peloton bike. The second thing being it's also a social place for a lot of people. Then afterwards you can go and have a bite to eat or whatever.
Yeah.
I mean, after you get off the Peloton bike, you're not going to go out with your buddy for a drink. Or you might do that independently. And so, I don't know. And I think...
do you guys see any substitute for Peloton, which also have the social aspect that they provide?
Maybe not in the near future, but maybe slightly further out. I don't know.
I don't know about you, Ali, but I don't think Peloton is a bad business at all. Just as I was mentioning at the start, I think it's a great business model, and I would love to work for Peloton because they're raking it in, and it's not about that. It's just about whether there's upside from here. I think they're going to survive. They make money. They seem to have a fairly competent management team. They've managed their operational risks well. They succeeded during a very difficult time when everyone's having to work from home. From a business standpoint, very, very solid. I just don't think they're worth $45 billion.
Yeah, I mean, having said that, difficult time, it's maybe been a beneficial time for them because it's helped because obviously everyone's from home, so gyms are closed.
But I mean in the sense of their actual organization day to day.
No, that makes sense. I think... Yeah, I mean, it's like with many companies. I remember the first episode we were talking about Tesla. It's a lot of people will tell you, traditional valuation doesn't work here. That's fine, maybe, but some valuation model has to work, and it's not sufficient for me to hear, okay, there's retail behind it, there's a cult-like following, people like this. Fine, if you're willing to hold over 10 years, maybe. But right now, I don't think that's a rational way of looking about where you're allocating your money. And the other thing, as well, is that, Peloton, I think, could easily be worth 15, 20 billion. Still a great company, still doing very well. Still has the money to invest year on year. But it's something slightly more reasonable. I mean, $45 billion, 310 times earnings.
So just
for a stationary bike with some, albeit crappy software. I mean,
so that's already. I mean, if we look at 45 billion market cap, 1.7 billion sales, that's already they're trading on what, 22 times revenue?
Roughly, no, a bit more, but like 25.
I mean, that's
yeah.
So 22 times sales is unbelievable for a
25 times revenue exactly. Actually, yeah.
I mean, yeah. Anyway, I think we can pivot on to this as well because you were going. I mean, I don't know very much about this disclaimer, but you were going to talk about Tilray and your weed stocks, which are another area of the market which have been driven less so by rational reasoning and more so by cultish followings.
Yeah, I mean, you look at it. I mean, we had GameStop first, which went crazy, and then gravity took it back to the ground. And then now, I mean, we had Tilray, and Tilray is a slightly trickier one because there is some like rationale behind it in the sense that, however flawed it may be, there's the gradual decriminalization and legalization of weed in various states and other narcotics. But
let me just stop you there. So, what do they do? Are they a brick and mortar weed retailer? I don't actually know.
Tilray.
Yeah.
Well, I mean, like, it's tricky. It's tricky with these companies because they do a variety of products and they do like CBD stuff as well. But I mean, I'm not a consumer myself of Tilray.
Not yet, at least.
But yeah, not yet, at least. Maybe if COVID lasts a bit longer, then maybe I will be.
Obviously, and if decriminalization in the UK.
In the UK occurs. But yeah, the variety of these like marijuana and like the constituent parts-based products.
THC, CBD, all that kind of stuff.
CBD. I mean, yeah, it's like CBD has obviously been super popular the last few years, but the real thing is that first of all, Tilray and Afria, which are the main two they're focused on, they're based in Canada.
Yeah.
First thing.
Is it legal in Canada? Must be.
Yeah, but yeah, I mean, it's different. It's also there's no like statewide variation.
Yeah.
But the main thing is it's like the Canadian market. If there were like very big and substantial changes, would be one thing. The US market doesn't actually affect Tilray and Apple that much right now. So that's the first thing that's slightly crazy. The second,
also they operate in Europe and Australia through like subsidiaries.
They do, but like it's the same thing. It's like I'm sure Microsoft operates in Burundi, but I don't know how much money they make in Burundi, to tell you. I think if you look at the concentration of revenue by country. So the thing is like Tilray.
How'd you come with that one?
No, long story. But anyway,
sorry, what the? God.
But so anyway, but moving on from Burundi.
But where on the map is Burundi?
Where on the? Honestly,
I think it's in Africa, isn't it?
Honestly, if you asked me to tell you like sub-Saharan or
this is like those memes where it's like asking American people like where America is on the map.
So point to America on the fucking globe, and they or point to like Australia, and they point to like Upper Mongolia.
Burundi.
Yeah. But anyway, but
sorry, I can't stop laughing.
But Tilray. I mean, okay,
also stop. We need to just cut this for a second. What the fuck? Where did you come with that one? In Burundi, I can't stop laughing. Okay.
Yeah. So Burundi segment over. Now back into the traditional stuff. But anyway, so Tilray reports earnings, and to be honest, I mean, I think we'll see some interesting share price movement. But the thing is like even with the case for decriminalization in the US and everything, Tilray is still it's a Canadian company. Same with Afria. It had a bit of short interest. That was the other main thing. 51%.
It's a bit of a GameStop AMC repeat.
Yeah, it's only a bit of a squeeze. But I mean, GameStop was like 120, 130%. Tilray was less. So it went from like start of the month like 10 to 70. Instead of GameStop went from like 10 to 500.
This is an interesting aside. I do wonder how it must be to run a business where there's so many structural risks. Like when you look at any nation business and you what you're really looking for as an investor is scalability.
Yeah.
That's like pretty much, unless you have some real other unique selling point, which I can't even think of. It's mostly scalability. Like, you take a small company, take a chocolate factory, for example, right? You can make great chocolate on paper, but if you only sell it to the people in the local town, it's not really a good business. It's all about how far you can scale that. And in every company, the world is your oyster. You're always thinking, okay, I can pretty much scale it to the entire Western world if I want, because consumer preferences are not that different necessarily between the UK and Europe and the US, as Peloton, for example. But weed companies are interesting in that they actually have regulatory boundaries.
Yeah.
So as an investor in the company, you always need to be thinking, right, I want scalability from here, I want growth, and yet suddenly these regulators are hanging this massive glass ceiling over you, where they can at any time go, actually, we're gonna bring back regulation on marijuana here, or places in Europe can go, yeah, we're never going to legalize this. So you'll never be able to have that expansion opportunity. And I just wonder, from a strategic point of view, what kind of conversations happen in these boardrooms where they're like, look, yeah, we can try and fill out the market in the US, in the states which it's allowed, but then where do we go from there?
Yeah, I think. Yeah, I mean, a lot of things. It's a political point. And like, I don't know if they have people within the management team who have some ties with government who can
really interesting conversation.
Help things out. But I mean, Tilray. I think first of all, the merger they did between the two biggest, Tilray and Africa, it's a clever one because they concentrate market power. And I think a lot of, if we look at how like the legislative system works in the US, a lot of this stuff happens in waves. Like, for example, the antitrust stuff at the start of the 20th century. That once the spirit of like a legislative movement is revived, it tends to sweep quite a bit. So I think on the topic of marijuana and decriminalization under Biden, I think there will be a lot of stuff. Similarly, actually, is like sports betting, and this is something I've looked into quite a lot.
Yeah.
And I think Kurot has quite a lot with PENN as well. It's the main issue is that online sports betting and iCasinos, it's legal in very few states now. So, for example, online sports books are legal in like 25 states.
Really?
iCasinos, 15. Yeah. Well, iCasinos actually 6.
iCasinos only 6 states.
Yeah. Currently, yeah.
But I mean, sorry, I don't actually know this. Is gambling legal for all the US?
So this is the tricky thing. So in Utah, in the Constitution, it's written it's written that basically the state's not meant to provide gambling access.
Well, okay, I mean the state's not meant to provide it, but is it allowed? Are you allowed to set up a gambling business?
It has to be regulated. Like, you can't shoot dice on the street anymore.
I love that the US is a country where I can walk around with a PPK in my pocket.
Yeah.
But at the same time, I'm not allowed to go and gamble my own hard-earned money on things. It's just, it's just ridiculous.
But anyway,
pick a bloody side, guys.
No, exactly. No, but the thing is like, if you look at this stuff, it's sweeping now. So, I mean, if you look at like PENN, for example, they opened the sports book in Pennsylvania. Opened in Michigan. And so the main argument also is that if you look at the US government on the federal level, but you also look at state governments, it's like they need to bring in money. They're going to tax, obviously.
Yeah.
Where are they going to get the money from? And so one of the arguments for like legalization and the more rapid legalization of sports bet and online sports betting and iCasino within states is that basically this will bring in a lot of money. Because the handle, which is the total amount that's actually betted, net of like revenue, no, it's not the revenue that the sports bettor makes. The handles are huge on this. So if they just took a cut, I mean, these are like tens of billions that government could be getting back in.
And you can argue that it's much better for the general economy to tax people who are gambling rather than taxing everyday consumers making everyday purchases.
Yeah. It's okay, fine. It's like, it's not the most ethical practice. It's not a business that's going to go away ever, realistically. I mean, it's been around since the beginning of time. And it also mobilizes disposable income to a certain extent.
Reminds me of Monte Carlo, the way they generate a lot of revenue from the casino.
Yeah, exactly. I think with a lot of these things, anyway, it's like, to wrap, I guess, this decriminalization and like legislative movements in the US up. A lot of these things happen in waves because of like exogenous factors, COVID, which speed it up, which means that the government needs more money back in. So it makes sense to legalize these things. And also just because, once there's a bit of traction, like these things come in cycles. It really flows through. I mean, we saw the first time Tilray exploded. It exploded from like 70 to 300.
Jesus.
To tell you, and as interest explodes, government follows. But yeah, I mean, so what I wanted to, funnily enough, get onto afterwards, speaking of valuations and crazy action, is SPACs.
Okay, my favorite topic.
Dave's favorite topic, which, we covered in the beginning. He said it'd be the defining feature of equity markets. Surprise, surprise. I mean, there have been quite a few. Sort of Bill Ackman's raised billions and billions and billions. It was insane. And so I think it was a fairly accurate comment. But so there was this one I was looking at. So it's called Churchill Capital.
Okay.
CCIV. And essentially what it is it's built up funds ahead of a proposed merger with Lucid Motors.
Yep.
Now, Lucid Motors took one of the I think it was the former CEO of Tesla, on their management team. It's this British guy. And they're producing electric cars. Luxury as well. Like, I think the top of the range is like 160k. But
presumably they are like gunning directly for Tesla's throats. They're saying we're making exactly the same models in essence.
Well, I mean, like the Model 3, they're not going to bother with the cheaper cars.
Oh, they're not. Okay.
They don't have the capacity, first of all, to build yet. They only have one factory which will do 30,000 cars this year. But also, it will take time.
So they're actually producing already.
Producing in December. Well, the factory's built. They're starting to produce. They're starting to produce and deliver for December.
It's really amazing to me that these car companies are able to get off the ground so quickly. I mean, people underestimate. I think of all the businesses on planet Earth, the automotive sector must be one of the most difficult to break into. I mean, the economies of scale which these big guys like Daimler, VW Group have are unbelievable. Unbelievable. Not just from a manufacturing point of view, when you look at supply chain, when you look at the fact that each of their models has parts which are consistent across all of them, so that reduces development costs. The fact that each of their models can be built in a different place, like, okay, look at Audi, so that's VW Group, right? The A1 is built in a shared plant in Spain, which it shares with Seat and Skoda, for example, and then the entire rest of their cars are built in the plants in Germany, and then the A8 is built in a separate plant as well. So they have all these different supply chains, and then they import the shells from X place, and they then assemble them in Y, and all these car manufacturers have incredible complexity of operations, and then they also have complexity of distribution, because cars, people want to test drive them, right? Most people don't just order a car, especially if it's an expensive car, and cars are getting so expensive these days. They don't just order a car online. Most people will spec it out at the dealers and then test drive a similar model to try and get a feel for how it would feel. And therefore, you need a massive dealer network, right? Both actual BMW proprietary dealers and like your kind of partnership dealers, like Marshalls for Audi. And all these kind of complexities have been built up over many, many years. And my end point being that how a company like Tesla or Lucid Motors can just pop up, or Rivian, and start making cars, or actually, what's that latest one called that I'm really big fan of, Rimac. I think VW Group's going to buy them, and I will explain why in another episode. So all those things take a lot of time to develop, and the fact that investors are willing to put so much capital behind them for the promise of only a return in a couple of years is amazing to me.
Yeah, I mean, the thing is as well is that when you look at American automotive industry, Elon Musk commented that only one American car company, hasn't gone bankrupt, and he risked it a couple of times. That's Ford. The American car market, it's different because, and like the automotive industry in the US, because the issue is, I think we'll unanimously agree that Europe's sort of the king of like car manufacturing.
Didn't used to be, but it is now.
Didn't used to be, but it is. Yeah, I mean, you got some Asian like strongholds now. Like obviously Toyota's doing very well, and there are a couple of others like if you find the Hyundai, etc. But like the point being is that Europe is really where, I mean, because the US, like the cars that they produce, how many are actually used in Europe? Now we've got Tesla. So how many are popular in Europe? Not really.
And I think part of the reason actually is just because the Americans have been so focused in the last 10, 20 years on building cars for Americans, whereas the Europeans have built
great cars.
Just great cars. And it's a bit weird to say. What I mean to say is that, for example, the best-selling car in the US, this is the easiest way to exemplify this. The best-selling car in the US is the Ford F-150. which is an enormous pickup truck,
Yeah.
which if you tried to drive in London, okay, yeah, you could legally drive it, but you wouldn't be able to get down half the roads.
Yeah.
And you'd be constantly honked at because you wouldn't be able to go down one-way streets. I mean, it would just be a disaster. You couldn't park it anywhere.
Yeah.
So just logistically, it makes no sense for their best-selling car to even operate in Europe or Asia for that matter.
Yeah. Yeah.
Equally, the best-selling car in the UK, I'm pretty sure, is the Ford Fiesta or it's the Vauxhall Astra, one of the sort of small coupes. That thing sells like hotcakes in the US. Opels, where
Or Golfs, for example.
yeah, Golfs,
Yeah.
because they are adaptable and they're
Yeah.
kind of flexible to different environments.
Yeah, I mean, because the US, they focus also on like some cultural points. Like the US, they love
V8, Hemi V8.
they love the muscle cars. They love the absurdly sized SUVs. They're sort of gigantic cars.
Like the Chevy Suburban.
Yeah,
I mean,
Suburban is insane.
I think it's got an 120 litre fuel tank.
Yeah,
I think I read the other day.
Yeah, and the other thing for them, it makes sense. I mean, because obviously, like, if you're looking at like fuel prices, US, UK, maybe it makes sense for them to have huge, massive tanks. But no, I mean, it's insane. You drive that in Europe, and think you were crazy.
Yeah.
But no, but so going back to CCIV.
Sorry.
Yeah, no. I mean, I love the pivot point, but they're worth about 10 billion. I say the SPAC just has 10 billion of funds. There's nothing actually in it. I mean,
How much do you think they're going to acquire of Lucid?
supposedly everything. It's going to go like public with CCIV. Supposedly, full thing.
But okay, fine. But I mean, presumably they're going to have a portion of the shares which they're going to remain private.
Honestly, I don't know because on what they're saying currently is they're saying.
Okay.
But again, the point being, the funny thing is that it is all speculation.
Yeah.
All of this, even the merger, very likely. I mean, it's unlikely this is unfounded. But at the same time, the Lucid Motors CEO went on CNBC. I watched the interview. Are you merging with CCIV? I can't comment. Maybe that's a good thing. Maybe that's also a bad thing.
So it's
I don't know,
still
maybe they're in
speculation.
negotiations, which they probably are. But it doesn't mean that anything's finalised. It's starting to be worth 10 billion. It's starting to have gone up 25% on
Wow.
Friday. It's starting to get pretty heavy. And when you look at risk, I think it's something quite interesting you should look at. Because even, like, you look, if Lucid sold every single one of the cars they did this year, which they won't, every single one they're supposed to produce, which they won't even produce that amount, okay, realistically, if you divided Tesla's valuation by the number of cars they sold and you scaled it down for Lucid, it would be worth something like 45 billion, which is insane, obviously. But even still, I mean, you're trading at a quarter of that with nothing, just off of rumours.
Yeah.
You're trading off for a quarter of insanity off of rumours.
Well,
You're trading off insanity with insanity.
It's hype about the electric car thing, and in fact, I was thinking about this the other day. Tesla is obviously the market leader currently, both in terms of their physical drivetrain technology, which is, I guess, what most people think about, but then also with electric cars also comes this element of self-driving, and they're also market leader on that. And it's the reason mainly is that most other companies are focused on what's called LiDAR, which is a type of radar which sits on the roof. You see the Google cars with this spinning LiDAR thing on the top. And Tesla has always said, I mean, Elon's been very, very straightforward in saying, we don't believe LiDAR is the future. So instead of LiDAR, they use a combination of video cameras and sonar to try and detect objects on the road. So Tesla's the market leader in both those two key areas, but it doesn't mean that other car manufacturers haven't managed to come up with their own innovative solutions and which they're building on. And I think it's been massively underestimated. I mean, disclaimer, right? I am long a lot of European auto manufacturers because I believe there is significant upside. People underestimate how useful it's going to be to have the distribution network and the repair network and the supply chain of a VW Group, which owns VW, Audi, Lamborghini, Porsche, Skoda, Seat, Bugatti. I can keep on going. Bentley. I mean, they own so many companies. Tesla, whilst they are valued at more than this, and whilst they have a ton of cash sitting around, the only real thing they can do is acquire an auto manufacturer to try and build their supply lines quickly. I don't want to know the amount of capital it would take for them to build out a similar infrastructure to some of the European car manufacturers. And when you've got guys like, I think you were going to talk about this as well, guys like Audi, who've now released their, the e-tron GT?
Yeah, e-tron GT, exactly, coupe.
I mean, and the Taycan, for example, which is they're essentially the same platform.
Yeah.
Because it's the VW Group, again, beauty of economies of scale. and it's ridiculously quick. And look, these car manufacturers are going to catch up. Tesla's going to stop being the pinnacle. Maybe they'll continue to innovate faster,
Yeah.
but they're going to stop being the guys who sell the most.
Yeah. Yeah, it's tricky. I mean, look, we don't know. This is speculation, obviously, where maybe we're more fans of like traditional, as much as we like Tesla and whatever. But yeah, I mean, Tesla has the pivot point on self-driving. I want to know what pivot point Lucid has, to be honest, other than just a good electric car.
In essence, really, it's not really an investment case I'm putting together, but my kind of forward-looking thesis for auto manufacturers is just that we need to stop underestimating the power of the European car manufacturers and your sort of stalwarts, because eventually GM and your Ford as well are going to catch up. I mean, we've seen Ford break a lot of very, very ingrained traditions over the last 10 years. The fact they released a Mustang in the UK, a left-hand drive Mustang in the UK with a 2-litre EcoBoost engine. I mean, what that does for Ford fanatics, it's like ripping their heart out.
Yeah.
And the fact they're willing to make these kind of moves, I mean, they're going to be all over the electric car thing. They are a slower organization, right? They're more cumbersome. But these guys are going to catch up. And the question is not if, it's when.
Yeah.
And I just want investors to be careful when they're looking at being long Tesla when that happens.
Yeah, and okay, Tesla's the market leader. Tesla's one thing, but I think the real danger as well is these peripheral stocks, these Lucids, these other electric only. Because the problem is, and it's a question of, Dave talks about them catching up in terms of electric sales, a proportion of total sales, and just total electric sales. The real question is when the brand recognition will catch up. Because the thing is with a lot of these,
that's a really good
with
point.
a lot of these companies, they're priced based on the brand being based on selling future, i.e., electric. Well, the thing is that maybe they sell the same amount of cars as Volkswagen. Volkswagen is still seen as a traditional, petrol company. When people finally begin to realize that traditional auto manufacturers can also be thought of as actually real electric manufacturers, then I think you'll see the valuation shift.
And actually, just adding on that, because I didn't realize you were going to say that. I thought you were going to say the value of existing name brands to new consumers. Like the Taycan. The Taycan has sold amazingly well. I walk down the street here in London and I just see Taycans left, right, and centre. That's a car that was released not a year ago. And it's a car that has very similar performance to Tesla, but is much more focused on sort of driving style. And so we definitely can't underestimate. It's what you were saying about people realizing that old manufacturers can do the same thing. But it's also recognizing that there are a lot of people, myself included, who would never consider buying a Tesla. And it's not because I don't like Elon Musk. It's not because I don't like the technology. It's because I don't like the look of the car, the inside. It's far too modern for me, if you will, on the inside. Too minimalistic. I don't like the fact that they have to use touch buttons to open everything. Why can't I open the glove box with a button? What's wrong with that? Why do I have to go into the touch screen to open the glove box? I just can't comprehend that. It works for some people. It's clearly very, very futuristic, techno-minded. I would love an electric car that has the same kind of amenities and luxury and style that I'm used to from traditional car manufacturers. And you know what? Audi, VW Group, they're going to do that for me. Daimler, they're going to do that for me. BMW.
The other thing is shifts to electric. Shifts are quick, but sometimes they're not as quick as we think. So we'll see. I mean, I think oil consumption is going to peak in like 2027 or 2029.
Well, this is the thing.
There's a lot of steam left in petrol cars, so I wouldn't underestimate that either.
And we're not saying that's a good or a bad thing. It is what it is, and you have to understand that most of the developing world is still running heavily, heavily on petrol and diesel. So even Portugal, which I, coming from Portugal, kind of treat as a third world country. They're more poor than people realize. Obviously, they're not a third world country. I'm not trying to say that, but I look at Portugal right now, especially if you go away from the big cities. So just to give you an idea, a good way of measuring, I guess, how a country looks at its cars is by looking at taxi drivers' cars. This has always been something I've looked at. So because taxi drivers tend to buy the cars which are the most reliable, and they tend to buy cars for a long time because they know they're going to use the hell out of them. The average taxi driver's car in Portugal is a Mercedes C or E class from the sort of W211 class, which is basically the cars produced between 2003 and 2007. That is the car that they all use. That's a car that's over 10 years old now, in many cases over 15 years old. And it's a car that is a stalwart. It's reliable, it's economical, it's comfortable, and it just doesn't break. And this is the car that Portugal is using. You can imagine the car that countries in Africa the poorer Asian countries are using. These are technologies which are, in many cases, 10, 20, 30 years behind. There's still going to be a large catch-up for a huge part of the developing world, which will have a growing population for the next 10, 20 years as well. So you can't discount the profitability of these old stalwart car businesses who, whilst it might not be ESG friendly, have a duty to provide, whilst, yes, innovative, but they have a duty to provide a reliable quality of service to these old car manufacturers, to these less developed countries. Because no one wants to see, this is the classic environmentalism argument, no one wants to see a situation in which developing countries are being prejudiced because of the ESG-friendly views of their Western counterparts.
Thank you very much for listening. Nice snappy one this week. Hopefully you covered some hot topics. Hopefully you've gained some value from it, as Gary Vee says. And yeah, that's goodbye from me.
Yeah, goodbye from me. Thank you very much for listening.